Money gives the illusion of freedom. We swipe cards, take loans, buy homes, and chase dreams. But lurking beneath this modern convenience lies something sinister. Credit isn't just a tool, it's a chain. Unlike the visible shackles of ancient slavery, the chains of credit are invisible. They come wrapped in sleek contracts, digital apps, and friendly offers from smiling bankers. The truth is, every credit card swipe, every mortgage signature, every student loan disbursement ties us into a system designed not to liberate, but to trap. Credit was sold as empowerment. In the mid-20th century, Americans were told credit cards represented a new era of independence. You could live today and pay tomorrow. But what wasn't explained is that tomorrow would come with interest, compounding, relentless interest. That's where the chains tighten. To understand how we got here, you need to see credit not as a neutral invention, but as an engineered system, one that corporations, banks, and governments rely on to keep the masses working, spending, and owing. Think about it. Why would banks lend so easily, billions at a time, to people who statistically may never pay it back fully? Because the system isn't designed for you to win. It's designed for you to stay on the treadmill, forever running toward the illusion of payoff, while paying interest that funds the very institutions tightening the chains. From mortgages that take lifetimes, to student loans that never die in bankruptcy, to revolving credit that resets month after month, the reality is simple. Credit doesn't free you. It keeps you bound, and the scariest part, most people will never see the chains for what they are. Credit didn't evolve naturally. It was constructed deliberately. To trace its roots, we have to go back to when industrial economies realized they needed mass consumption to survive. Before credit became widespread, ordinary families saved for years before purchasing homes, cars, or furniture. Growth was slow but stable. Banks and corporations saw a problem. If people waited, the system couldn't expand fast enough. The solution? Create a financial mechanism that encouraged people to spend money they didn't have, locking them into long-term repayment. The first modern credit card appeared in the 1950s, with Diners Club. At first, it was marketed as a convenience for elites, businessmen dining in New York. But soon, banks realized the model could scale. By the 1970s and 80s, credit was aggressively marketed to the middle class, and suddenly, debt became a normalized part of life. Mortgages ballooned into multi-decade commitments. Car loans stretched longer and longer. Student loans exploded, targeting the aspirations of young Americans who wanted upward mobility. Governments even encouraged it, subsidizing loans for education and homes. It looked like opportunity, but in reality, it was entrapment. Debt became the engine of the U.S. economy. Corporations thrived not because consumers were wealthy, but because they were perpetually indebted. The average American's life was designed to revolve around repayment schedules: work, earn, spend, owe, repeat. And once dependence took hold, breaking free became almost impossible. Debt didn't just fuel consumption. It began shaping society itself, molding behaviors, lifestyles, and even values. If debt is the chain, interest is the lock. It's the mechanism that ensures no matter how hard you try, you'll never truly escape. When you borrow $100, you don't owe just $100. You owe $100 plus whatever percentage the lender decides. That percentage, interest, may seem small, but compounded over years, it multiplies into staggering sums. Credit card debt, for example, often carries interest rates above 20%. This means if you only pay the minimum, you could be paying for decades. But here's the real trick. Interest transforms lenders into perpetual winners. Even if you eventually pay off your debt, they've already profited multiple times over. If you default, they sell the debt to collectors. Either way, the system extracts value from you. Interest has been controversial for centuries. Ancient societies condemned usury, seeing it as a moral crime. Religious texts warned against it. Yet modern economies run on it. Why? Because it transforms every citizen into a resource, an income stream. You are no longer a worker alone. You are a debtor, fueling banks with your future earnings. This isn't just personal, it's systemic. Nations themselves borrow on interest, selling bonds, financing deficits, and perpetuating cycles of repayment. Whole societies are chained by interest, ensuring wealth flows upward, consolidating power in fewer hands. Debt doesn't just drain wallets, it shapes behavior. Credit has become one of the most effective tools of social control in history. Think about the psychological pressure debt creates. When you owe thousands in student loans, you're less likely to take risks, start a business, or challenge the system. You can't afford rebellion when you need that paycheck to meet monthly obligations. Debt keeps people compliant, focused on survival rather than freedom. Employers know this. Governments know this. Banks thrive on this. Credit has become a leash, pulling entire generations toward conformity. In the United States, young people often leave college not with opportunity, but with tens of thousands in loans that dictate every decision afterward. What job to take, where to live, even whether to marry or have children. Historically, rulers used armies and prisons to control populations. Today, the credit system achieves the same result without chains or soldiers. You don't need to be locked in a cell when your own financial obligations keep you in line. The greatest irony? Most people view credit as freedom, the ability to buy what they want, when they want. But the reality is inverted. The more dependent you are on credit, the less freedom you truly have. This is why entire industries, from real estate to education, are structured around debt. They don't just sell homes or degrees. They sell long-term contracts that ensure predictable streams of payments. Your debt isn't a mistake. It's the business model. Debt doesn't stop at personal finances. It scales up to nations. Just as individuals are trapped by credit cards and mortgages, entire countries are shackled by international loans and credit systems. Institutions like the International Monetary Fund, IMF, and World Bank extend credit to struggling nations, promising development and stability. But the loans come with conditions: structural reforms, austerity, and economic policies that prioritize repayment over prosperity. These nations end up servicing debt for decades, funneling wealth outward while their people remain poor. It's the same trap, only bigger. Interest payments flow upward, from developing countries to financial centers in New York, London, and beyond. Nations can't declare bankruptcy the way individuals can. Instead, they restructure debt, take on new loans, and perpetuate dependency. This global web of credit has created modern empires without armies. Why invade a nation when you can control its resources and policies through debt obligations? Credit is the invisible empire, spreading chains across continents without firing a shot. From Africa to Latin America, from Asia to Europe, the same pattern repeats. Debt traps nations, curtails sovereignty, and ensures wealth flows to the top of the global pyramid. Credit is not just a personal issue. It's the very foundation of global power. The most insidious part of the credit system is its design. It never ends. Debt doesn't simply get paid off. It gets rolled over, refinanced, or replaced with new obligations. Take the average household. Pay off a credit card? A new one arrives in the mail with better rewards. Finish a car loan? Dealers lure you into trading for a new model with fresh financing. Pay off a mortgage? Rising property taxes and maintenance costs keep you bound. The system ensures there's always another chain ready to replace the old one. This cycle is intentional. Banks profit from repeat borrowers, not from those who escape. Entire business models are structured on recurring interest payments, and governments quietly encourage it because consumer debt drives economic growth. If people suddenly stopped borrowing, the economy would stall overnight. The cycle is addictive, too. Just like casinos design games to keep players feeding quarters into machines, credit systems dangle temporary relief, balance transfers, refinancing, debt consolidation. But these are illusions. They don't remove the chains. They just polish them. This endless cycle is why debt levels climb year after year, generation after generation. Once inside, escaping isn't about paying off what you owe. It's about breaking away from the system itself. And very few ever manage to do it. So, is escape possible? The answer is complicated. Individually, yes, you can minimize debt, reject unnecessary credit, and build financial independence. But the system is designed to resist your exit. Banks tempt you back. Society pressures you to conform. Buy a bigger house, get the newest phone, finance the latest car. Breaking the chains requires discipline, knowledge, and often sacrifice. But the bigger question is collective. can society escape? History suggests otherwise. From ancient Mesopotamia to modern America, credit has always resurfaced in new forms. Sometimes debt grows so unbearable that rulers declare debt jubilees, wiping the slate clean. Other times, economies collapse under the weight of credit gone wild. Either way, debt never truly disappears. It morphs, adapts, and reclaims power. That's the ultimate lesson. Credit isn't just about money. It's about control. A controlled population is predictable, docile, and profitable. And unless more people recognize the chains for what they are, the system will keep tightening, link by link, generation after generation. The silent chains of credit don't rattle. They don't clank. They don't even look like chains. But they are there, binding billions of people, shaping nations, and quietly rewriting the meaning of freedom. And the hardest truth of all, most people will never hear them. If this gave you a new perspective, click subscribe. History has the answers, and I'll show you where to look.